So I wrote down a couple things here, did a little bit of math, and we'll take a look at it. So January 1st, their price of their Bitcoin, they paid 105 for it, but at January 1st, Bitcoin's price was roughly around $80,000. They sold calls between 105 and 110, and those expired March 27th, so 2 months later. The average vol between that time, so volatility of Bitcoin during that time, was between 50 and 60%. And they were selling their calls 31.25% out of the money and 37.5% out of the money. So quite significantly out of the money. So if we take a look at these Greeks, these are the metrics here. So the delta, they were basically doing a 10 delta covered call strategy, which means that the likelihood based on the volatility metrics and the share price and the time frame and everything is calculated at a roughly around a 10% chance based on historical and current averages and everything. 10% chance that these calls would expire in the money, and it would be a losing trade for them at the end of the day. So there's a 90% chance that these calls get expire worthless, essentially. The 60% vol brings that up to a 14% chance, or a 14 delta, 0.14 delta. And that's for the $105,000 strike price. If it's 110, it's a 0.06 or a 6% chance, and a 0.10 or a 10% chance. So these are very low probability covered calls, and that's why they're earning a very little amount on it. So overall, I don't think it's the worst strategy in the world to be actually using the Bitcoin in this way to do a covered call strategy. I don't love the rehypothecation, the custody aspect of it. I don't like GameStop at all. I don't actually own any GameStop shares at this point. I did initially when they bought into Bitcoin initially, and I thought, okay, this could be interesting. They did a convertible bond that didn't amount to anything. I thought, they were kind of going to go hard on the Bitcoin. They didn't. It's sort of a lame duck kind of company as far as I'm concerned. It sort of had its moment in the sun with Roaring Kitty, and then is just really not doing anything. So I sold covered calls actually against my shares of GameStop at the time, and came out really well from that. Did well. I don't expect it to go parabolic or anything like that. And they don't expect Bitcoin to go parabolic. So I'm not interested in holding GameStop as an individual investor myself. But I do find it interesting that this Bitcoin treasury company, or this company with Bitcoin, is doing something with their Bitcoin that is unique and that other companies aren't doing. Personally, I like what Strategy is doing, which is using it as capital to issue these digital credit instruments in the form of preferred equity to raise more money to buy more Bitcoin. To me, that's more appealing. That makes more sense. This is something that is fine to do as a company, to earn a little bit of extra premium, a little bit of income, to be able to use that for operations or for buying more Bitcoin, hopefully. But I doubt that's what GME will do. I think they're probably just trying to lower their cost basis and kind of just seeing Bitcoin as an unproductive asset on their balance sheets, unlike their treasury bonds, which have yield on it, which is most of their capital they hold. And so they're just trying to kind of get some kind of yield from this, even though it's really insignificant in the grand scheme of things, and does actually put their Bitcoin at risk in a kind of multiple kind of ways, I would say.